Okay, guys, so in this video, we are trading the indicator live. You can see the chart is moving here, and we are looking for a potential buy signal on the indicator. Right now, the market is down 125 points, and we're looking for a bounce. So I wanted to do this to show you how the indicator works in real time. I know there's probably questions. When do you trade? How do you do it? You know, some of you with the indicator have emailed me about when it comes on and how it works. So to start the day, we did get a buy signal, which was a winner. This was a nice trade here, about a 15% winner. We got stopped out on the pullback here, but perfectly executed on the upside. And then they've dropped here. They've broken the low, and they're well below our two major day trading levels. So this is the EMA 21 and VWAP. And when price is below this, it is bearish. When price is above this, it is bullish, and it uses it for back tests quite often. So you can see right at the first of the day, they got above it, got right back below it, back tested it, and flew down. And now they're pretty far away, which usually means they're going to come back and touch it. So we should, and we're coming into support. So we should see some sort of buy signal here fairly soon. And if we do, we're going to trade that, obviously, and go over how the indicator works. Now, the market is careening to the downside. So you're not going to get a sell signal. We opened 80 points down. The sell signal happened here and way up here. So you got those two sell signals. And we don't trade the pre-market. So the blue over here is post-market. So that's the overnight, and then the morning trading is yellow. We don't trade these. We let them go. But we need them on for the indicator to work properly. If you're not familiar with our indicator, it is called Invest with Jacob, IWJ Pivot Point Pro. And it is only on TradingView because they protect the code, and I appreciate that. Thank you, TradingView, for that. It's only on TradingView, so you have to have a TradingView account to use it, which is what we're in right now. So we are on the 5-minute SPY chart, and we're looking for, we've got support levels here. We're looking for support area, and then we're looking for the indicator to give us a reversal sign where we are going to buy the market, even though we are down 125 points and careening to the downside. The indicator's job is to find reversals, and it does a really, really good job of it. If we go back to Friday, we had this buy signal, which was an absolute ripper straight to the upside. This sell signal, which is an absolute ripper straight to the downside. And then this buy signal here was an absolute crusher straight to the upside. I mean, its job is to find these lows. And right now you're looking at the similar kind of price action. Everybody's like, why would you buy here? Because of this. And it absolutely killed, and we killed. Friday was an incredible day, one of the best we've ever had, and another, just crusher for trading for us. So we are looking at trying to find a reversal down here. They've made a new low below Friday's low into our support area. We're looking at about 5650 or so on the ES to be our support. We are at that level now and bouncing. So we're going to look for a buy here, hopefully from the indicator that tells us we've reached our level that we're looking for, and we're trying to get some upside. However, if they fall through that 56.35 would be the next level down. So we'll see if the bulls can step up here and fight at all and give us any kind of indication that we're going to get some kind of move back to the upside. Again, you're not going to get a sell here because here's how the indicator works. It works in cycles. So you get a buy cycle, and it's looking for weakness in this buy cycle. Once it sees weakness, it issues a sell. It is still in a buy cycle when it issues this sell, but it sees weakness in the overall market because of price action, whether that's resistance and momentum and volume and everything else. It sees weakness and is looking for this. And then it must complete a sell cycle before you get another buy. Otherwise, you're just going to get what's called a stop. So you have a long stop here. So this did not complete a buy cycle, and then you got to stop. So you're still in a sell cycle. And until we get a buy cycle that completes, you're not going to get a sell. And the reason for that is we gap down 80 points. Again, you don't want to chase markets. That's a bad entry. So what we look for is solid entries and solid trading. And this is how you beat the market. You trade off of key support levels, you trade off of setups, and you have stops and setups that make sense. So what we do is on our trade, we want to take a 20% profit right out of the gate. If we can do that. And then we take half off at 20%. So as the market moves up, we took half off at 20% here. We moved our stops up. We got stopped out, and we made money on that trade. You never turn a winning trade into a losing trade. That's really bad trading, really emotional bad trading. So our first goal is to get 20%. Then we let our runners run and go from there and see what we cash out for. And the reason for that, the big reason for the 20% is this 20% up here cancels our stops down here. And then all of our runners are profit. All right, we got a little bit of a green bar coming off support here, so we'll see if they can get any kind of follow through. We have not seen much follow through today yet, but this would be the place we'd look for it. If we have along here, our strike is 564. There it is. There's our buy signal, so we're going to take it. We're in at 273 at 564, and our stop is going to be 563.85. I get this out to my group here. Okay, so the buy signal flashed as soon as it turned on. You see it turned back off right there. We took the buy, and if we get stopped out, so be it. That's part of trading. But that's how we do this with the buy signal flashing, because the first bar can quite often be very strong. They are going to struggle right here. This is a breakdown bar, so if they, as long as they can hold this level or get through this level, we should see an okay move up. But right now we have our buy, we have our stop. So 563.85 is our stop. We'll see if the bulls can follow through here and give us a winning trade. And then we'll go from there. We are quite far from 21 and VWAP, and they usually want to go back and touch those levels. So we are now sitting here with our long. We got to get through this resistance area right here. They chopped on it, then broke it down. Now they're pushing. This is what we want to see. Again, we got in at 273, so that's 54 cents is going to be what we need. So 327 is what we're going to get our first take at. Okay. Price is moving through resistance. We're at our next small minor resistance right here. They're kind of rejecting it, but major resistance is going to be at the 21 right here. So we'll see if we can get up there. Right now we're looking for 327 to give us a 20% win on our option. So we got in our option. Our strike price was $5.64. And our cost was $2.73. So that basically means 54 cents is 20% win. And we want to take that price for half of our trade. So we close half at a 20% winner, assuming we can get to $3.27, $3.27. And then after that, we let the runner run and see if they can get through and reverse this. All right, we're just about there. I may adjust this. We are at heavy resistance, and I don't want to step over dollars to pick up pennies. We're at $3.21. We want to get to 327. So I'm going to give them one more chance to get back up there. Hopefully we don't fail here. Struggling with this resistance right here, this breakdown bar. If they can get back above this area, they can squeeze a little bit. This is going to be a major area of contention right at 567. But from 566.39 to 567.34, so about $1, this can squeeze pretty quick if they can get back up there again. It's a big if. Closing up near this high would be better. Looks like they're going to fade a little bit into it. Let's see if they can push back up on the next bar. So reissued on the buy. We're already in here, so no big deal for us. That's why you take the first buy. You get a better entry sometimes. The first bar is heavy moving sometimes. So you take it as soon as it appears. So we're actually in before this buy even appeared, or, we'll lock in on the chart. And that's what you want. You want to be in as low as possible. So that's why we take the buy as soon as it flicks. And we'll see if they can push up here. We're almost to our target. Hopefully they can push through. If not, we're going to stop out here. And that's unfortunate because we missed it by a few pennies. That happens sometimes. That's part of trading. But I don't know. We'll see. We'll see if the bulls can do this. Very typically here, they're going to go up and touch the 21. So I'd like to see them do that. I think that would be the case here more often than not. So if they're going to dead cat fail this, more often than not, what they're going to do is come up to here and then do this, which would make us a winner. But they have to actually do that. So let's see if there's any bulls buying this market down here at this low, and we'll go from there. There we go. Let's get on up there. Almost there. Push through that resistance, and then we can squeeze them a little bit up into the 21. When I talk about squeezes in this sense, guys, I'm talking about little mini squeezes, 2-3 points on the, 2 to 5 points on the ES that would net about 50 cents or so on the SPY. There's our first take. We get $3.27. So there's a winning trade right there, guys. We're going to set our stops to 273. And we have our first take in. So that's a 20% winner. I'm going to type this in my group real quick. Day trade alerts. Close 1/2 for 327. Now it's all about the runner. Can they get this going? I will probably take a little more off right here because this is major resistance. You can see right here is major resistance right at the 21 and all of this low. So that's where they're likely to fail if they should fail here. And if they squeeze, well, then we're in high cotton, as they say. So we have our stops at our break-even point. So our net on this trade would be 10% should we stop out. Right now, price is at $3. We have our stops at 273. This trade does have very big potential. We are coming out of a major support zone where we were looking for a potential bottom. So we are looking for the bulls to try to really rip this higher, and they're doing it now, which is great. And this is how you trade, okay? So right now our stops are at 273 and price is at about 330. And as this moves up, we're going to move our stops up. So when it gets to 350, 360, I'm going to move my stop up to $3. I'm also going to take a little bit off right here because for two reasons. Number one, we're counter trend trading. Okay, so we're trading against the trend overall. It's a big down day, so we don't want to get too greedy. And two, this is a major point of failure for bull moves on a trend day down. So when you have a trend day down, major points of failure are the EMA 21 and VWAP. So we want to take some profit there to maximize our overall gain on the trade if we get there. Right now, back testing this support here. So they broke out, come back tested. If they can hold that, then they can come up and test the 21 and we'll see what happens from there. It's very possible we fail and make another low here, guys, but we got a winning trade, and that's all we're looking for. If you're a more conservative trader, you could take more off earlier. If you're a more aggressive trader, you can take less off earlier. I would highly recommend taking some off at the 20% level because that allows you to counter any failures in the trade and wash those out. So the 20% gain isn't meant to be like, oh my God, I'm going to get rich off that 20%. It's a steady, awesome builder on your money. It's crazy good, but it's more meant to wash out the losing trades. So if you get a bunch of these type of little trades, like this was a 15 or so percent winner because of the stop loss, this one will be a 10% winner. These two will wash out any losing trade that we have, and then our next runner is all profit. So that's why we trade the strategy we do. Bulls need to step up here. This is a little bit of a pullback bar to test down here. This break down candle high and this break up candle low. This is a good support area, so they should be able to hold this. The bulls should if they want to continue, and they're trying to now. Now I will say, given that we came up close to the 21 and then pulled back, if they come up to the 21, we'll still probably take some off, but that is an indication that they are likely to push through it. We'll see how they react once they get there, but when you come up close and don't get it and then come back to it, that's usually an indication you want to break through. Okay, so our stop is held. They got down to about 295 there. Again, our stop is at 273. And here in the near future, guys, I will do this on YouTube live so that we can all trade together on YouTube and you guys can comment and we'll go through how the indicator performed and all that kind of stuff. We'll do that right at the open. So I'll start the video, a few minutes before the open, and then we'll trade the open. There's usually a trade right at the open like we got today. Again, 2 for 2 today, so another winning day so far. Unlikely to be a losing day once you start 2 for 2. It's pretty good, and if they can run here, which we're really looking for, that would be ideal. This is starting to have a bullish feel, which I like since we're long. The inability for the bears to go ahead and reject and take it back down so far is good. The 21 is going to be our next key level because of all of this resistance right here. It's right at the 21. You got a big shelf that they got to get through. And then at the top of that zone is also resistance in line with VWAP. So this zone right here, if they get above 566.29, that is a zone where the bears or bulls can really squeeze. The bears are okay holding Friday's low right now. So they're back testing Friday's low. And as long as they can hold that, the bears are okay. Getting above that would be a little bit of a warning to the bears. They were trying to make a bullish feel. Now it's kind of looking like a potential reversal candle. We really wanted them to hammer this out instead of a hanging man, but we'll see. We'll see how it goes. If they reverse here, this is a hanging man. From an internal standpoint, we're not seeing overwhelming selling, which is what you'd want to see for down moves like this. The volume is negative and the ADD is a little bit negative, but not in the way you'd want to see for a 125-point move down, which tells you there is some weakening in the overall move. So the strength of the overall move down is weakening a little bit. So we do want to keep an eye on that because that's a kind of under the hood indication that things are not as strong to the downside as people believe. And then when you get these big reversals, should we get one, people are shocked because they're not sure where to look or where they could have seen that this was not going to be a strong move down, if that makes sense. Or continuation of a strong move down. The move down was strong, don't get me wrong. The move down is strong. Continuation of that move is what I'm trying to say. All right, the bull's still trying to hold this level. It's a very big level for them to hold this support here. Otherwise, we get back down into this area. And, it's certainly possible they can do this, obviously. But for the most immediate bullish move, they want to hold where they're at right now. And there they go. Let's go, bulls. They close the gap. There's a little gap up here. Let's see if they can push out here. Does look a bit like some buying coming in here, but again, they got to get up through some key levels here before it matters. From an overall Elliott standpoint, let's go over to the ES real quick. I'm going to do that a different way. Let's go here. So we are looking for this to potentially be this red 3 and a bounce in 4, or this black 5 and all of circle 4 being done. In either case, we're looking for a bounce back towards this 5,800 area. If they hold that area, we can definitely look for continued downside. If they get through that area, 5888 becomes really important, and above that, it's a strong signal we're likely on our way back to the all-time highs. But again, we got to see them stop, get a reversal, and bounce from here, and then we'll see how that goes. All right, still moving down. Okay, we just stopped out. So we stopped out at 273, and that's going to be an average exit on our trade of $3. And so that average exit of $3 is it's a 10% winner. So we won 10% on that trade, and really didn't take much heat on it. So I'm going to go ahead and we'll come back over here real quick to the SPY. I am going to go ahead and shut this video down. I just wanted to give you a real-time look at the indicator and how we make money, how it works, when we take the trades, all that kind of stuff. I'll do this again live, like from the open where it's on YouTube and everybody can stream with me and make comments. I just wanted to do a practice run here with it as well. So winning trade on the buy, and now we'll see if the bears follow through to the downside. Thanks, everybody.